Well, today's job figures from the ABS were a bit of a mixed bag. Although the unemployment rate was steady at 4.2%, the trend is not your friend if you're currently looking for work. And the labour market shrank by more than 5,000 people, which was a lot worse than expected. Now, this slowdown in jobs creation has been the trend for quite some time, and it's part of the Reserve Bank's plan to cool the economy down. And the RBA is not expected to reduce rates again until the end of the year. Speaking of which, the US Federal Reserve has cut its interest rates by 1/4 percentage point for the first time all year. That weakened the greenback and caused the Aussie dollar to shoot above 67 US cents. But it did a full 180 almost immediately after the Fed's chairman Jerome Powell said his central bank is in no hurry to cut rates again due to concerns about rising inflation, while the US jobs market is starting to struggle, which potentially means fewer rate cuts ahead and more angry tweets from Donald Trump. The Aussie dollar right now is sitting at 66.2 US cents, though it went up against the New Zealand dollar after some new figures showed our Kiwi neighbours are at risk of falling into recession again. And while gold, oil and iron ore prices fell, many of the major share markets overseas dropped apart from Japan. And the local share market slipped by around 0.8%, with Santos shares plunging nearly 12% after the Abu Dhabi National Oil Company abandoned its $30 billion takeover bid at the last minute. And it's not the first time this has happened either. Back in 2018, Santos rejected an $11 billion buyout from Harbour Energy. And last year, Woodside Energy walked away from its plans to merge with Santos. So after 3 failed takeovers in 7 years, it's no surprise shareholders are starting to feel annoyed. And that's finance.